Hello, everybody. I'm Eleanna Karvouni, lawyer from Machas and Partners law firm in Athens, specialized in real estate. I have the honor to moderate this very distinguished panel. We will focus on real estate, trying to tackle the question if real estate in Greece is an ever-expanding sector. Times are uncertain. In a general economic environment characterized by volatility, real estate investments seem like a safe bet for investors. Sound, traditional investments spared from the confusion of our times. Greek real estate, more specifically, has been booming the past years. Greece, with its inherent qualities, landscape, climate, culture, geopolitical situation, has become an international pole of attraction for this kind of investment. Save the opportunities that were created by the crisis, the sector has been thriving since, not only thanks to Greece's upgraded country ratings, but also because the sector is now addressing not only domestic users, but more and more users from all over the world. Greek actors of the real estate market are driving this growth. Here with us today are some of the most important actors and experts in Greek real estate, highly accomplished, all of them, and qualified to guide us through the market trends and give us all the latest insights from the sector. I do not want to take up their time, so I shall give them directly the floor. I would like to start with Mr. Argyros next to me, Managing Director, Head of the Investment Banking Division and member of the Executive Committee of Axia Ventures, a leader in investment services in the region. So Mr. Argyros is more than well qualified to give us the big picture, the macroeconomics. So Mr. Argyros, we heard the positive message throughout the day. Do you agree that today Greek economy has fully recovered and is back to normality? And that we could even further claim that its economic momentum is very favorable investment-wise, and that despite the bumpy times ahead in the world economy? And that last part is the core of my question, actually.
Absolutely, and thank you, Eleanna, for the introduction, and thank you to Capital Link for having us once again this year. I think the rest of the panel are more qualified to talk about real estate per se. I can give my 2 cents and spend a little bit of time on the more macro picture here, and as it relates to the real estate sector as well. You use the term, booming in terms of the real estate sector in Greece. I would say that definitely we're in an upward trajectory. Definitely we've come off the lows that we've seen in previous years, and there's many reasons for that. But we're firm believers that we're still in the early innings of that recovery, and there's still a lot more to come. And I'm sure the gentleman to my right will give you plenty of reasons why. But again, from a big picture perspective, the real estate in Greece, the real estate sector in Greece, is benefiting from 2 very positive trends. One is a global rotation of capital into more traditional asset classes, real estate being one of the most traditional asset classes. So we went from investing in very high growth tech situations to reverting to more defensible sectors such as real estate. And definitely, part of the recovery in Greece has been on the back of that. But more fundamentally, I think the fact that Greece is recovering, I wouldn't say it's fully recovered, it still has a lot of way to go. We've heard, businessmen, politicians, investors, all pretty much echo the fact that we're definitely in an upward trajectory and definitely still early in an investment cycle for Greece. I think real estate again has been the beneficiary, a net beneficiary of that trend. Now, we have to be very careful, obviously, not only because of the headwinds, but because when we talk about real estate, it's 2 very short, easy words, but it encompasses a lot of different asset classes. And when talking about real estate, you can talk about anything from greenfield development to redevelopment to investing in mature assets. And again, there's many subsectors within that. There's commercial real estate, there's residential real estate, there's hospitality. There are all kinds of asset classes, logistics, and many other asset classes. So not everything is aligned and on the same point of the cycle, but I would say that generally speaking, if we look at the asset class as a whole, definitely an upward trajectory, but definitely with a lot of room to go. The one thing that I think is missing from the landscape of real estate in Greece is to have more people and more companies represented by people like the ones we have on this panel here. Historically and traditionally, it was more of a family sport to invest in real estate in Greece. More and more and increasingly as time goes by, it becomes much more of an institutional asset class. And that's being helped both by the companies that have been set up in Greece, but also the fact that a lot of money flows into the country, a lot of the FDI into the country goes towards real estate. Just anecdotally, over 20% of FDI in 2021 was towards real estate. Personally, and I think most of the people on this panel will agree, we would like to see a bigger and bigger portion of that 20% be more institutionally positioned across various sub-asset classes within real estate. So to put a kind of full stop to that, I would say again, reiterate the fact that yes, we've come off the lows, we've fixed a lot of the issues that existed in the past, but definitely still room to go and still a lot of upside.
So, with focus on real estate, how did last year go from your point of view, and what are your projections for 2023?
I think the last year probably reflects the general comment that I made before. Obviously, there's a lot of capital flowing into real estate. Yields generally are contracting. Obviously, we have to look, as I said before, to different sub-asset classes within real estate and see what's happening there. I think the rate of improvement probably decelerated because of the headwinds that we have. But certainly I think the overall trend is positive. The one thing I think that did not help, with one very bright exception that is represented here on the panel, is the fact that the capital markets were not really available for most real estate companies. So I think that's one thing that's a result of the overall economic environment, not just in Greece, globally. That once that is rectified as well, we will see a lot more activity and a much faster pace of recovery.
Thank you, Mr. Argyros. Now I think we'd all like to hear some numbers. So let's get to an expert who knows Greek real estate like the back of his hand. Mr. Manoussakis, head of SAVILLS Greece in Athens for more than 25 years, an expert in real estate advisory. He is also a real estate appraiser, certified by the Royal Institution of Chartered Surveyors. So, Mr. Manoussakis, could you give us a few indicators? What is selling, price range, yields? Could you put up some figures to help us understand the situation and the potential of the real estate market in Greece?
Thank you, Eleanna. Thank you, first of all, the organizers for giving me the opportunity to be here. It's a great event, and I hope it will bring investments in the country. To connect a bit with what Alexandros just said, I think, yes, we all agree that the economy is the main issue of concern at the moment, and there are headwinds in front of us. I don't know for how long, 9, 12 months, it's a matter that we need to analyze further. However, having said that, I would say that the Greek real estate market performed well during 2022, following a successful 2021, and the Athens market, the Athens real estate market, which is the largest market in the country, experienced a great 2022 despite the adverse economic environment. Because it all comes down to numbers, and according to the Bank of Greece data, the Greek institutional investors, the Greek REICs mainly, invested nearly 450 million euros in 2021, and this figure is expected to increase by at least 10 to 15% this year in 2022, showing the dynamism of the market and the appetite that institutional investors have. Also, we should add on this figure approximately 250 million euros that are invested by private equity funds and family offices who are also very active in the Greek market, and they focus in almost all sectors of commercial real estate and hospitality. Having said the above, and giving you the volumes of the market, I can tell you that champions of the commercial real estate market are the office sector and the logistics sector, not leaving aside the hospitality sector. The office sector brought a lot of attention, and it, I would say, consumed most of the funds that Greek institutional investors channeled in this sector, followed by logistics, which is a very dynamic sector which attracts a lot of interest, not only from Greek institutional investors, but by private equity funds. At the moment, there is a lot of competition in the prime locations surrounding Athens, especially from investors who are interested not only to buy ready product, but to acquire land in order to develop modern stock. Because, as you probably are aware, we're missing modern stock, and at the moment there is great need for this sort of stock to be produced. Just to give you an idea about the level of rents and the level of yields, rents have increased by 15% during 2022 in all the prime office markets, office sub-markets. The leading sub-markets are Athens North, which could attract the rents in the order of 27, 28 euros per square meter per month. And of course, the CBD, although the CBD is not a very large market due to the fact that there are not a lot of land available for developments. However, the CBD could attract rents exceeding 30 euros at the moment. In terms of yields, we experienced a drastic yield compression during the last 12 months. In the office sector, we experienced at least 50 basis points as a compression. And in the logistics sector, this was even higher, 75 to 100 basis points. To get an idea about prime yields, we have in the offices yields in the order of 6% or even less than that. We have experienced transactions for 5.5%, 5.75%, and in the logistics sector, the market started with 8%, now going down to 7.5%, 7.25%. Just to give you a bit of flair in terms of the hospitality sector is also a very dynamic sector. In 2021, 390 million euros were invested in hotels in Greece. We expect this to increase by 15% in 2022, exceeding 400 million euros. We would expect this amount to reach the level of 450 million euros. 3,600 rooms changed hands in 2021, which is a serious increase comparing to 2020. This amount was 2,800 rooms, and the average value per room is around 110,000 at the moment. A final comment is that there is a qualitative change at the moment in Greece. It's the ESG, which has become a main trend at the moment, and I would like to say that all the main investors have put ESG in their agenda, both developers and investors, and they always need to tick the box of ESG first before approving an investment.
And just in a couple of words, one comment, because we have to move on to the next panelist. Would you give us your view on market trends? Are there new opportunities? Is real estate in Greece an ever-expanding sector?
Yeah, actually the outlook is positive, although we have an adverse economic environment. We believe that the Greek market will continue thriving. There is interest. We receive a lot of interest from abroad, and not only for the traditional sectors, but we see interest for new sectors like build to rent, purpose-built student accommodation, integrated resorts. We believe that 2023 will be a catalyst year for new investments in the field.
Thank you, Mr. Manoussakis. So now let me bring in the key players themselves. The three gentlemen will have the honor to share this panel with, to represent three of the most successful companies in Greek real estate. Mr. Andriopoulos, CEO at Dimand, a leader in development and real estate projects that recently went public. Mr. Kazinos, CEO at Trastor, the first real estate company to go public, today part of the Piraeus Bank Group. Mr. Karytinos, CEO of PRODEA, another listed company, but not just another company. PRODEA boasts to be the Greek company with the biggest real estate portfolio. They are here today willing to explain to us their successful strategies. So I'll start with Dimand SA. Office spaces, hotels, residential projects, serviced apartments, stadiums, you name it, Dimand has already developed it or will be developing it in the near future. But also, Mr. Andriopoulos, your company has the ESG concerns that Mr. Manoussakis mentioned. You are very environmentally conscious. You are one of the first to have developed LEED certified offices, and even though this kind of practice is getting more and more common in Greece, you've been doing it for so long that when I hear LEED Gold, I immediately think of Dimand. Could you tell us more about this positioning?
Yes, thank you very much, Eleanna. But before commenting our ESG strategy, I want to share something with you. Yesterday, I had myself a real estate tour in New York, and I went to visit the Hudson Yard project. And then I discovered how peculiar is our business. Because if you enter the shopping mall and you take the elevator to take you up to the edge, you pay $40 per person. And I've made an easy calculation. If they issue 1,000 tickets a day, which is an easy conservative number, they do 16 million euros out of an elevator and a balcony. So, you know, this is not a joke, it's reality. And I did it myself, and I was up there and I said, why sometimes we complicate things in our lives? And I still remember the London Eye project, which was a real estate project in London, and then it was sold to BP, a private equity fund, for 85 million pounds. So real estate is a very peculiar business, and we became extremely sensitive with environment about 12, 13 years ago, because we've realized that buildings are producing 40% of the CO2 emissions. And since then, which was very primitive, let's say, for the Greek market, we only design and develop green, gold certified LEED buildings. And up to now, 40% of the entire stock in Greece used to belong to us or is developed by us. Now those buildings belong to PRODEA, Grivalia, and so on. And we're very proud of it because it is proved over the years that it was a right strategy. Environment, in our opinion, will remain one of the biggest challenges in the future, and is connected with climate changes. And you know that development projects and buildings are going to be more and more exposed and sensitive to the climate change. And up to now, very few companies and very few projects, they take seriously the environment or future potential catastrophes. So ESG is a top priority for us. Right now, together with PRODEA and EBRD, we are developing the first zero carbon tower in Piraeus, in Greece, and it's going to be ready in a year from now. And I think companies and individuals, they should follow that example, because it's the only way for us to survive and respect the place we live.
Okay, thank you. But apart from the environment, you also hold highly societal values. We can see that through your projects around Omonia Square and the Athens Center. You're not just interested in developing a building, but bringing new life to whole neighborhoods. Could you explain that choice to us?
Yeah, you know, life and reality brought us something new in front of us back in 2015. Because develop a building, it's something, but is not, let's say, very important for the rest of the neighborhood. So entering in Piraeus, an ex-industrial area, and buying a tobacco factory, which was the biggest one in Greece, Papastratos, with a new owner, Philip Morris, we bought big plots in the port of Piraeus, in a very industrial area. The place there after 3 o'clock was dead. Not even, you know, electricity was available in the area. And by buying those large properties and convert them to offices, we've realized that the city needs more and more from the developers. And the city regeneration became our pattern. We did it successfully in Piraeus, and then the city center was next to it, and up in Thessaloniki another one, and now in Fotanikos, which is again an ex-industrial area. So we've realized that by regenerating an area and contributing to the municipality and the neighborhood, you achieve many different goals with one action. And the city regeneration became not our motto, but our reality in everyday business. As an example, in that district in Piraeus today, they work 9,000 people. All the public infrastructure is there. We see now galleries and restaurants, and now houses and hotels. So people, they maybe remember how it was Soho in London 40 years ago, or the Docklands, and how it's today. So by doing that, you add value in many different sectors.
One of my favorite restaurants is there, I think you know.
Paleo.
Yes.
Yes.
So thank you, Mr. Andriopoulos. And now let me get to Mr. Kazinos from Trastor Real Estate Investment Company. Mr. Kazinos, twice this year, I think, or more, Trastor made official announcements on profit increase. I understand that you implement a very active asset management strategy to generate the returns for the shareholders. How do you see investment opportunities in Greek real estate in the current environment?
Yeah. Thank you for the invite, Nicola, and thank you all for staying to listen to our panel. I know it's been a long day and it's easy to doze off. Well, undoubtedly we're living, I think, in very challenging times, probably as challenging since the end of the Cold War. We're witnessing an energy crisis, more profound than I think in the 1970s, an environmental crisis, and then to top it all off, we had an unprecedented fiscal stimulus, which was 3 times larger than the GFC package, totaling about, I think, $10 trillion US. Just to put it into context, global GDP in 2020 was about $85 trillion US. So all that liquidity has to go somewhere, and in my view, I think this is also one of the key reasons for the rampant inflation that we're seeing right now. And the policy responses we all know, and we've heard, I think, throughout the day, is the increased interest rates. In Europe, I think you probably all know, we went from 0 this year to 2%, and I think we're probably expecting another rate hike next week. So if you look at all of that, it just doesn't bode very well for all risk assets, and I think real estate globally is also facing a lot of challenges, which creates uncertainty for real estate investors, tenants, and landlords. And on top of that, I think there are a lot of now questions that we have to answer in real estate, which is, what's going to happen to valuations with the increases in interest rates? Would hybrid work create permanent change in office demand? Are new developments viable with regards to higher construction costs? So clearly we expect to see market adjustments. Some of them will be cyclical, but some of them will be permanent in our view, things like incorporating ESG criteria into our assets. Now, however, real estate, I think we all appreciate, is an inflation hedge investment. It's not a perfect hedge, but because it would depend, I think, on the nature and the type of the inflationary pressures, but still real estate is an asset class that fares better in these economic conditions. Now, Greek real estate in particular, I think it's poised to provide a short-term hedge from the current headwinds, but also has the ability to deliver top outstanding long-term returns to real estate investors. And I make that assertion based on three things. One, I think, is the macro environment. I'm not going to bore you. I think we all heard about the strong advantage of Greece over the entire Eurozone, not just for this year, but growth is expected to increase by circa 3.5% to 2026. Unemployment is declining. The banking system is much healthier, and very importantly, government debt is on long-dated maturities with low locked-in rates. Second, I think, is the administrative and governance changes that have taken place in Greece. Greece today is not the Greece that it was 5 years ago. I think the Mitsotakis government undertook a number of structural reforms that promoted economic development. We've got record high FDI, and then obviously coupled with European funds, RRF and other funds, we expect about 60 billion of investments to be mobilized over the next 5 years. And lastly, but quite importantly, I think, are the Greek property fundamentals. The Greek property market lost about 50 to 60% of its value during the crisis years, and although we've recovered a big chunk of that, still rents are about 20% below previous peaks. Also, during the crisis years, very few developments have taken place. So in Greece, we refer to grade A office buildings, for buildings built about 20 years ago. The housing stock is like 1970s. Logistics only really kind of attained critical mass about 4 years ago. So there's a great demand-supply imbalance that for prime properties that we think, combined with a structural shift due to the pandemic, will create interesting long-term investment opportunities for real estate to those investors that are willing to kind of look beyond the short-term turbulence that we're experiencing right now.
To link to what was said before, you also have the concern to make your portfolio greener. I've heard that you have LEED certified the first logistics space in Greece, and you're upgrading from an energy-wise your buildings. Apart from that, well, how do you plan to set the focus of your investment strategy in 2023?
Well, Trastor has always been a value-add investor, so we typically try to find attractive buy properties at low values relative to the market, and then employ an active asset management strategy to unlock value, whether it's previously buying assets that were vacant and leasing them up, or buying assets with low passing rents but placing them at higher market rents in due course. And now, as you mentioned, lately we started looking at repositioning of projects and developing new ESG compliant assets. So we think that with cap rate compression sort of taking a pause because of heightened interest rates, it's very important to find assets that have got the presence of strong rental growth. So in 2023, we primarily focus on the office, prime office, and logistics sectors. We're looking at the redevelopment of 2 of our existing properties into a flagship product with ESG certifications. We're also looking at creating our first ground-up development with the help of Dimitris for a first LEED certified office building. We completed the first LEED certified logistics center in Greece. So for 2023, our aim will be those 2 sectors, but also we'll be looking at adding value to our existing portfolio through injecting additional capital to them.
Thank you, Mr. Kazinos. Last but not least, Mr. Karytinos, CEO of PRODEA, a company with a real estate portfolio estimated around 2.7 million. Correct me if I'm wrong. You're also... Million. Sorry, million. Yeah, it's a big difference. You're also investing in green buildings. You will have acquired some of Dimand's green developments. You're being financed through green bonds. It's the first green bond in real estate, if I'm not wrong, assuming environmental responsibility as an obligation towards the subscribers. Would you like to share with us your view of Greek real estate and where you think things are going green?
Actually, I think that being the last, I don't have to add many things to what you see have previously been said about the Greek real estate. I think the analysis of all the previous speakers was very thorough and complete. So definitely the major characteristics of the Greek market now is this transition that the market is undergoing, which is a transition to the new ESG era. I think that all the players understand now that we're not talking about a new fashion. When we're talking about ESG, we're talking about a new paradigm in the market. The future is the green buildings. After a few years, if you don't have a green building, you will have an obsolete building. This is the new reality for real estate, not only in Greece, but everywhere, of course. The good thing is that we're not lagging compared to the other countries, because this green revolution has started practically, you see, in the same time in all countries, which means that we're not, you see, far ahead, but definitely we're not far behind. For example, in our case, we will have, in the end of the year, about a portfolio of 500 million of green offices, which is a little more than the second largest REIT in the market. And we believe that within the next 5 years, maybe more than 80% of our portfolio will be green in all sectors. So this is the main transition that the market is undergoing, and this is the core of our new strategy. In terms of the major sectors we are focusing, of course, it's obvious that the hot sectors now in the market, apart from the green offices, is logistics and also the new product in logistics, which is with greater volume, much higher in 14 or more meters compared to the old buildings that were below 11 meters, and with green characteristics. So this is the new product in the logistics sector. Now we have started to build also and to operate green hotels. We have the first green hotel, which we built together with Dimand in Omonia Square, Marriott Moxie Hotel, which is the first with green certificate, with LEED, Gold Green certificate. And I think this is, again, even in the hotel sector, the future in the buildings. Finally, we are the first, I think we are already the first institutional investor who is entering the REIC market in Greece. This was, until now, you see the space of much smaller individual contractors offering the product, producing and offering the product in Greece for many years, for many decades. And now we, as the largest institutional investor in Greece, we offer a new generation project with green characteristics, and we offer also our after-sales guarantee for the product, of the quality of the product, which is the first for the Greek market. This is more or less the transition we're undergoing now, and it has totally different characteristics in terms of quality of the product and specification of the product of what it used to be all the years before.
You're also betting on hospitality through your participation in Mediterranean hospitality ventures.
Actually, hospitality is one of our core, investment sectors. Definitely because it's one of maybe the pillar, the heavy industry of the Greek economy. It's with all the different connections with the other sectors of the economy is responsible for more than 25% of the GDP of the country. So it's the most important sector by far, and it's the most important export sector that we have in Greece. I think that it's the main interest of all the foreign investors. The first that they ask is if you have a significant, investment in your company in the hospitality sector. So it could not be, it could not be, part of our strategy. We have two ways of investing there. The one is through a joint venture with other investors, and we're investing in high-end hotels, mainly resort hotels, and we have more investments, direct investments in city hotels through the company. So we cover the whole, a range of hotels in Greece. I think it's fast-growing sectors with new characteristics as well, not only in terms of the quality of the product, but also in the quality of the operator. So, as all the other sectors in Greece, hospitality sector was not an exception. It was, and it is, prevailed by small companies, small and medium-sized companies, mostly family companies that operate hotels. And now we have a transition towards something much more institutional. We have larger developments, mixed projects with resi and hospitality. And most importantly, we have branded hotels, which was something lacking in the Greek hotel industry. So we are now entering into, again, a new era, even in the hospitality sector, which helps a lot the growth of the sector and the valuations that will be much better in the future because of these new characteristics.
You spoke of investors. We know that PRODEA shares are highly concentrated right now, but the word is out that the company is looking towards a higher free float. Do you think that there will be soon an opening for more new shareholders to invest in PRODEA?
Actually, I cannot speak for the investors of the company, but definitely, this is what happens in all the companies that have foreign investors. After a cycle of 5 to 7 years, all the funds want to exit, and you have new investors coming in to replace them. So this is a reality in this industry. Yes, we have investors that are, the major investor now in the company comes from the US. We have another English fund, and actually we have 2 American funds and 1 English fund. Yes, we are in process of increasing our free float because it was very small for the size of the company, and it's much more healthy to have more free float. Our target is to increase it to at least the levels of 15 to 20% in the near future. So we are in a process of attracting investors that want to invest in the company. Definitely in the future, I believe that once there will be interest by investors that they want to invest in the company, they have to talk with the existing investors, and most probably they will find a way to discuss about it.
Thank you, Mr. Karytinos. Thank you all. It was a pleasure talking to all of you. Thanks to the Capital Link Forum for having us. Thank you all for listening.